Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 5th of February 2022, and we're publishing our Gold and Silver Weekly Update for the week ending the 4th of February, which shows both gold and silver prices rising, but only just. So let's take a look. Okay, so taking a look at precious metals first, we can see that gold rose $16 last week, rising from $1,792 to $1,808, having hit a high of $1,815 and a low of $1,786. Now that's a rise of just under 1%. In sterling terms, gold finished the week at £1,337, that's down £1. And in euros, it closed at 1,579 euros. That's down 28 euros. Silver rose 3 cents, rising from $22.50 to $22.53, having hit a high of $23.05 and a low of $22.02, a rise of just 0.1%. In sterling terms, silver closed at £16.65. That's down 13 pence on the week. And in euros, it closed at 19.68 euros. That's down 0.51 euros, or half a euro. The gold to silver ratio rose from 79.6 to 1 to 80.2 to 1. Cryptocurrencies in the last couple of days have fared extremely well, with Bitcoin now rising $3,657 over the past week and currently stands at $41,402. Now, looking at equities, we can see that the Dow Jones closed on Friday at 35,089, down admittedly 21 points on the day, but up 362 points on the week. The S&P 500 closed at 4,500. That's up 23 points on the day and up 69 points on the week. And the Nasdaq Composite closed at 14,098. That's up 219 points on the day and up a reasonable 328 points on the week. So equities do seem, over the past couple of weeks, to be staging a slight recovery. However, on the negative front for all of us motorists, Brent crude closed at $93.27. That's up $3.24 on the week. And WTI crude closed at $92.31, and that's a rise of a whopping $5.49 on the week, and reaching above the $90 level we predicted last week. The dollar index stands at 95.48. That's down quite a considerable 1.79 on the week and reverses the previous week's gain. We concluded last week's video with the following forecast. We see gold trading between 1750 and 1850, with 1725 and 1875 as outliers, and we see silver trading between 2175 and 24, and 2150 and 2450 as outliers. Well, as we can see, both gold and silver traded well within our normal trading ranges. There was a lot of economic data published this past week, and frankly, we were expecting larger swings than the $29 differential between gold's high and low, and the $1.03 differential between silver's high and low, especially bearing in mind the rather significant fall silver experienced the week before. Looking at the gold chart, it practically remained in negative territory for most of the week, taking quite a dip when the non-farm payrolls came out, but regaining composure back to the level it traded mostly at for Friday. To be fair to gold, it has remained resilient around the 1750 to 1850 level. It almost feels that gold is comfortable here, almost regardless of what news or economic data is announced, and this has been the case for some months now, taking it into broad perspective. In fact, during the past 3 months, gold's low has been 1756 and its high 1877. Even on a 6-monthly basis, 1877 has been the highest gold has reached, and 1691 its lowest. And that was a very bad time for gold when it fell below that $1,700 level. If gold is proving one thing, and that is, it's perhaps one of the most stable currencies around. Yes, from an investment point of view, it's unlikely to earn you a fortune, but from a stability point of view is well up there, even when faced with the prospect of imminent rate rises. Now, technical analysts will now point out that gold has support at 1802, which is where the 50-day moving average rests, and resistance at the 10-day moving average of 1811. This, for us, is too small a differential and would prefer the more psychological 1750 to 1850 levels to give us a slightly broader perspective. The MACD histogram, though, is pointing to lower prices ahead. Silver, by comparison, has had a much wider spread over recent months. Looking at the past 3 months, we can see it's been as high as $25.42 and as low as $21.45, though the 6-month perspective is admittedly similar, with a $25.50 high and a $21.45 low. That said, the reversal of silver this week, which until Thursday was in positive territory, fell back on Thursday and then again after the payrolls on Friday, though it did stage a slight recovery towards the end. From a technical point of view, we have support at $22.55 and the psychological $22.50 beneath it, and resistance at the 50-day moving average at $22.84. The fast stochastic has suggested a buy, while the MACD suggests a sell signal. We often have technical divergences with silver, or so it seems. Now, before we talk about predictions for the coming week, it's worth looking at economic data first. We had manufacturing and services indices and PMIs broadly in line with expectations. A disappointing ADP employment report, but a far better than expected non-farm payroll report, not only showing 467,000 new jobs against expectations of 150,000, but also significantly upgrading December's figures to 510,000 as well. If anything is going to ensure the Fed will raise rates in March to tackle inflation, this was it. The Fed has a responsibility to ultimately bring inflation down to 2% and ensure full employment. Well, if these figures are to be believed, it need not worry about employment. So what have we coming out of the US this coming week? Well, on Monday we have consumer credit for December. Tuesday, the NFIB Small Business Index for January and real household debt for quarter 4. Wednesday, wholesale inventories for December. Then on Thursday we have weekly jobless claims as normal, plus CPI and core CPI for January. That's where our attention will be, and the federal budget for January as well. And then on Friday we have the UMich Consumer Sentiment Index and the 5-year inflation expectations, both for February. So a much lighter week compared with last week, but the CPI figures will be most relevant. Whatever happens this week, and really during the whole of February, we cannot see the Fed not raising rates in March, especially as the United Kingdom raised its rates again last week for the 2nd month in a row, and EU economists predicting that it too may raise rates twice in 2022, and to some extent this caused part of the reason for the dollar index falling. Geopolitically, we still have simmering away the potential threat of Russia entering Ukraine by force, and the energy crisis being faced by Europe in the main, and ever-increasing crude oil prices. So with all of this in mind, we see gold trading between our two favorite ranges, in fact, 1750 to 1850, with 1725 and 1875 as outliers. No different really to last week. We've narrowed the margins for silver this coming week. We see silver trading between $22 and $23, and $21.50 to $24 as outliers, though frankly we'll be quite surprised if it gets as high as 24. What do you think? Do share your thoughts. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And finally, we wish you a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.